Hello everybody, good morning, good afternoon, good evening, depending on where you are. Welcome to your Daily 5 for Monday the 1st of June. My name is Julius de Kempenaer and I'm your host for today's show. I'm a senior analyst with StockCharts.com. I write the RRG blog on the site and I host Sector Spotlight on StockCharts television every Tuesday from 10:30 to 11 a.m. Let's get started with your Daily 5 for today. As you could expect, my starting point will be a relative rotation graph. And while I was preparing this, I realized that it is actually a little bit of cheating when you use RRGs in your Daily 5, because the chart that you're looking at right now holds the 30 Dow stocks. And this RRG shows you the relationship of 435 charts. That's not really 5 charts, but anyway, you know why that is, because it's 30 times 30, that's 900 possible relationships inside the Dow, minus the 30 stocks inside the universe, that's 870, and we can divide that by 2, which leaves 435 relationships. What I do when I look at an RRG as a starting point, I try to find interesting tails. I'm not going to do it during the show, but in preparation I highlighted a few stocks and tails that I wanted to spend a little bit more time on, and I've isolated them here so the chart becomes a little bit more readable. And these are more than 5, but the charts that I want to go into a little bit more detail today are CVX, Chevron, which is inside the improving quadrant but nicely heading towards the leading quadrant. That's always an interesting rotation. The second chart is Home Depot, which is already inside the leading quadrant, spent a little bit of time moving sideways and just recently started to pick up some relative momentum again and pushing further into the leading quadrant. The third stock is J&J, Johnson & Johnson. You see that the rotation is rolling over and started to fall on the RS momentum scale, and it's almost hitting the weakening quadrant. But I think that there is a very interesting price pattern building up in this stock, and the fact that it is so far to the right, which means that it is a very strong stock from a relative point of view, makes it an interesting chart to still keep an eye on. And the final, so I spent one chart on this one, the RRG, and then the fourth individual stock is United Health, UNH. Just like Johnson & Johnson, rolling over inside leading, looks like as if it's going to hit the weakening quadrant. But I think that the chart in itself, in combination with the fact that UNH is still relatively high on the RS ratio scale, gives us a good opportunity for future profits if things work out. So let's start with the individual charts. United Health, like all other stocks, February to March was horrible. What I do like here is the fact that the stock respected that long-term horizontal support in the, let's say, 205, 2010 area. You can see the labels. That's a bit the area where we found first resistance and later support. And if you look at the close here, that was like middle in that range. A little bit of an overshoot and then a quick recovery, and that recovery is what makes it a very interesting chart at the moment, because that recovery, after a couple of weeks of consolidation against its previous all-time high, it's now pushing higher. This show is on Monday. I'm recording it actually over the weekend, and this is a Friday close. We had a Friday close at a new all-time high. That is a bullish sign. If we can hold this up together with the rotation of UNH on the RRG, there could be a lot more price gains in store for this stock. So keep an eye on this one as long as it remains above 399, 400, so to say. Second stock, Johnson & Johnson, also in the healthcare sector. As you can see, the relative strength is rolling over. The RRG lines, the RS ratio was at a very high level. RS momentum is rolling over, almost crossing below 100, which would put Johnson & Johnson into the weakening quadrant. But what I really like on this chart is the fact that you see this range here between roughly 115 and 140. We broke that at the start of the year. That was a good run. Then we got the Corona crash hitting us very hard. Also Johnson & Johnson. We dropped back into that range all the way down to the lower boundary. But now that recovery took us out of that range again to a new all-time high. And what I really like was what we see here, because this looks like a flag pattern developing. If Johnson & Johnson is able to hold up above 140, and I think we should see that happening, and we break out of this flag type pattern, say you see prices to say around 150 next week at the close or the week after that, then we complete that flag pattern and we got a huge upside potential in this stock. So for this reason, I am keeping a very close eye on this chart because I really do like that rally, that flag-like consolidation, correction, and I'm looking for a breakout out of this flag pattern to shoot Johnson & Johnson further up. The third one that we're going to talk about is Home Depot, another one that respected the horizontal support level that was set in the, let's say, 150 area for like 2-3 years already. It was a resistance level first, we broke it, it became support, again became support, and then it caught the Corona decline around 150 a couple of weeks ago. Here also a very, very, very strong rally, which this week is breaking to new highs. Home Depot at 248.48 at the Friday close is above its previous all-time high, and that's a break to new high. So that makes Home Depot a very interesting chart to keep an eye on. If you look at the RRG, if you go back to the first chart, you see that it is at a very high RS ratio level. It had a little bit of a consolidation, but now the RS momentum line is picking up again, pushing Home Depot further into the leading quadrant, making it one of the better stocks inside the Dow Industrials. And we're going to finalize with an energy stock, Chevron. This doesn't look good at first. We have this range, we broke it, and now this former support line is now starting to act as resistance. But I do see the consolidation here with higher lows getting into place. So there is a little bit of tension building up here. If you see the relative strength, that broke out of this declining trend and the RRG lines have started to pick up. RS momentum is already above 100. RS ratio has bottomed and is moving up. This positions CVX inside the improving quadrant. And what I'm looking for is a break above 95 US dollars, preferably at a Friday close. When that happens, I expect Chevron to go all the way back to the upper range of that channel. And that concludes today's Your Daily 5. Thank you for watching. Please leave your comments below the video.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.